last informational speaker for the day. We'll get up here. Dr. Frayne Olson is the Crop Economic Marketing Specialist with NDSU Extension and Director of the Quentin Burdick Center for Cooperatives. He received his Ph.D. from the University of Missouri in Ag Economics, MS and DS in Ag Economics from NDSU. And like everyone, I'm excited to hear him tell us why grain markets can only go up from here.
Well, I don't know if I have that good of news, but it's good. All right. Let me get my clicker here and make sure it's on. All right. Well, good afternoon, guys. Thank you for hanging in there. I know it's been kind of a long day and a lot of information. So I'm going to give you an update on the markets. I'm going to do a little bit on corn, a little bit on soybeans. We're going to spend a lot more time on wheat. Obviously, the wheat show, I want to make sure I don't miss anything. I am also going to try and go through this fairly smoothly. If there are questions that come up, this is the real point I'm here, right, is to try and answer your questions. So I'll go through things. If you got questions as I'm going through, holler out. I'll do my best to answer them. If I've got this timed out right, we should have plenty of time at the end for Q&A as well. So I'm leaning on you for time management. Okay? Anybody that's heard me before knows that I can go on and on and on and on and on. Okay, well, I got lots of time. All right. So here's my contact information. So if you guys have any questions or anything you think about afterwards as you're driving home, you know, don't be scared to send me an email or send me a text message. I'll try and get back to you as soon as I can. But I will caution you, I do have a very heavy travel schedule this winter. Everybody wants to have in-person meetings, which is great. But that also means that I'm spending a lot of time on the road. So I will get back to you as soon as I can. I usually check emails in the evenings and trying to get responses at that point. All right, so let's go through this. Guys, I was scrambling like crazy trying to get everything ready because there was a big USDA report that came out earlier today at 11 o'clock. So I'm trying to get all my numbers updated, and fortunately there wasn't a lot of changes, so my job got a little easier. So this is the most current information we have from USDA. Now, whether you like USDA or don't, whether you agree with the numbers or not, I really don't care. But these are the numbers that most market analysts and traders start looking at, and they say, okay, for example, if you listen to the radio and the market close, or if you're looking at some market analysis and you're reading other people's interpretation, a lot of times they say, well, this is what USDA is saying, and here's why I think they're wrong. And then they go on and explain why they think they're wrong. Well, if you don't know what the base is, it's pretty hard to say, well, do I agree with their assessment or not? Okay, so again, I'm not going to go through all these numbers. That's not my point today. But I do want you to be familiar with them so you understand what's happening. So the column on the far left-hand side is in blue, is what we're the marketing year win right now. So that's old crop corn, old crop soybeans, old crop wheat. So the stuff in the blue is the stuff we have in the bin. At the end of February now, in a couple of weeks, USDA will come out with their first forecast, their first basic estimates for what they think is going to happen in 2022. And the market will watch that pretty closely. Now, all of the forecasts they're going to have are mathematical forecasts. They're saying, well, based on budgets and typical relationships, this is what we think is going to happen. So that'll be at the end of February. The March 31 planting intentions report is going to be the one where markets go crazy. It happens kind of every year, trying to figure out what's going through your head, how many acres of different crops you're going to plant. So the one at February is going to be watched, but the one at end of March is going to be a really important one. So mark your calendars. That's going to be an important day, March 31. Okay, so right now, these numbers here are old crop. It's the crop that's in the bin. I'm going to make some comments about what I think is going to happen in 2022 as well, so you can at least keep your eyes and ears open. All right, what am I talking about? Let's talk about corn. Just for a reference point, I want to make sure everybody's on the same page. Based on the USDA numbers, we had the second largest corn crop in history. I'm going to say that one more time. The second largest corn crop in history just beat, not quite meet, we didn't quite get to the record, but we came very close. The reason I'm bringing this up is I know there was a problem. We had kind of a horrible year up here in North Dakota. South Dakota had kind of a rough year. Minnesota had a tough time. Parts of Iowa had some rough going. But understand the rest of the Corn Belt, especially the eastern Corn Belt, had a fantastic year. So we've got lots of corn around. That is not the problem. Okay, now usually when we have a really big crop, we tend to have low prices. Why aren't we seeing low prices today? The price of corn is actually really good right now. I don't know if you've noticed. Why are we having such good corn prices, given the fact we had a record crop? We had a record soybean crop too. Ethanol, it's, okay, broadly defined demand. Okay, so we had a really big crop, but we also have a lot of demand base. There's a big need for corn. Now, why is that important for you guys that grow wheat? When corn prices are low, when we have really cheap corn and things are going along, we got lots of corn in the system, the wheat market kind of does its own thing. It responds to its own supply-demand conditions. But when corn prices get high, when we have, like today, when we have really high corn prices, the wheat market has to stay at a premium above corn so that it doesn't get used as a feed, as an animal feed. Now, most of you guys are thinking beef, right? And yeah, the western, you get into western Kansas and the feedlots, they'll take hard red winter wheat and dump it into a ration. That makes sense, right? But there's also a lot of wheat that can be used for poultry. Now, as you know, beef is a ruminant. It takes a while for the digestive system to adjust to a new feed mix. So you got to transition wheat in and out of the diet. Poultry is a monogastric. It's just like you and I. Okay, I had Wheaties for breakfast, I had a hamburger for lunch, and I'm fine. It's the same thing with poultry. They can have corn in the morning, they're going to have wheat in the afternoon, it's not going to hurt their digestive system. Okay? So my point is if wheat prices fall too much, some of that ends up in the feed pile. And the U.S. milling industry does not want that to happen because it's high quality wheat. Now I'm thinking primarily hard red winter wheat, not necessarily spring wheat. Okay? Now, one question I got earlier on, why isn't spring wheat higher than it is than it was this like right around Christmas? And the problem we had was that winter wheat was too low. So there's only so much of a premium that spring wheat can have above winter wheat. So you start to see the connection here, right? As corn prices go up, that allows winter wheat to go up, which allows spring wheat to go up. Okay, so the comments I'm making about corn right now are going to be really important as I move into the wheat talk and we start explaining what's going on in the export market. And in particular, what might happen to wheat prices if Ukraine and Russia start shooting at each other. Okay? So this does all tie together. You can't just look at one crop independent of all the others. So bear with me with corn a little bit. It does play into my wheat story, I promise. So how do we use up corn? And I know the guys in the back are going to have a hard time seeing this, but I'll explain it to you really quickly. So the blue line on top is the amount of corn that goes into the livestock sector. Now this is whole corn. It doesn't include DDGs. It doesn't include corn silage. It's corn that's been run through a combine. Okay? The red line is ethanol, the black line is exports, and the green line is everything else. Now again, the guys in the back may not be able to see this, but on the far right-hand side there's some little dots. So the little dots are current USDA forecast. So I'm going to go through this. What's our demand base? What has changed on the demand side that we have such high corn prices? Well, the feed, the amount of corn going into the feed pile, is about the same as last year. At least that's based off of USDA's estimates. And I don't have a problem with that, right? The cattle herd is shrinking a little bit. We got a few more hogs. We had the poultry industry is expanding a little bit. So the numbers, by the time you balance everything out, pretty close. The red line is ethanol, and we have seen a recovery in ethanol. A couple years ago, in particular, when COVID first hit, we stayed home. We didn't drive very far. Okay, people were working from home. The schools are shut down. Universities are shut down. We just didn't drive much. So if you don't drive much, you're not consuming much gas, which means you don't need a lot of ethanol. Hello. Make sure you're awake. All right. So what's happening now? We're opening up our economy. We're now driving more. We're getting back into this kind of normal consumption cycle. So we're using more corn in the ethanol industry. That's a growth over the last couple of years. The big deal has been really in the export market, which is the black line. So last year we had record corn exports. We sold more corn in the international market than ever before, primarily because China came in and bought a lot of corn. Okay? Now, USDA is forecasting a slight drop-off from last year, which makes some sense. It's really hard to forecast like 2 record years in a row. So we'll wait to see. We are following that. The Chinese are coming in now in the last week or so to buy a little bit more corn. So we're starting to see the Chinese market rebound a little bit. They've been buying U.S. corn, but a little bit slow. Okay, so how do we look at the bottom line? How much grain are we going to have left over just before harvest of next year? And the reason this becomes important is not only does it impact corn prices today, but it impacts how many acres of corn do we need in 2022. Okay, so I'm going to show you another graphic in a minute. This is the absolute number. It really didn't change from the previous month. I'm going to talk about the stocks to use ratio. So we're taking our ending stocks, the amount of grain we think we're going to have left in the bin, divided by our total use. It's a percent. So think of it as what percentage of our total needs are we going to have in reserve in case there's a problem, which is the blue bars on the bottom. So the red bar is the current forecast, and that can change depending on what happens over the next several months. The blue lines are history. 2 things you got to understand. When the blue bars are really small, when our inventories aren't very big, when the pipeline is pretty thin, 2 things happen. We tend to have higher grain prices, but a lot of volatility, because any new piece of information suddenly changes people's perspective about what has to happen. Either it goes up a lot higher to try and ration use, or it drops down because they say, we've got a little bit bigger margin for error. On the flip side, when those bars are really big and tall, when the bins are full, the pipeline is full, prices tend to be relatively low, and they tend to be pretty stable, because it takes a really big change for people to get excited and say, oh, well, we better be careful. If the bins are full, we got a reserve, no problem, right? The reason I'm bringing that up is look at the red bar right now relative to the blue bars. Where are we in history? How does this year compare to the past years? Recognizing back here, 1996 was our record low. How are we stacking up today relative to history? Do we, are we about right? Are we kind of average? Are we really tight? Do we have a lot of excess? Slightly below average. Yep. Okay, so what does that mean then for how many acres do we need in 2022? Depends upon what kind of yields you project, right? So let me rephrase the question. Does the corn market have to bid really aggressively to try and get a whole bunch of more acres in the U.S.? Not really. Can they afford to see a lot of slippage? Can they afford to give up acres? Not really. So the corn market right now is looking at saying, if we can have about what we had last year, I think we'll be okay. We're kind of right in the middle of the range. And if we can stay in the middle of the range, everybody will be happy. Okay? So how does that reflect in prices? So this is a chart. I pulled this as of the close today. Again, the guys in the back are going to have a little hard time seeing this, but I'll do my best to explain it. So the black line is the futures market price for the March corn contract. Basically, that is the contract that the elevator uses to price corn delivered today. So if you load up your truck, you deliver some corn to the ethanol plant, they're going to use this futures market price to base their bid off of. So what do you see? What's been happening since harvest? Recognizing harvest is kind of right in here. Pretty steady increase. And in fact, it looked like it's kind of flattening out about the first of the year, and all of a sudden we got this second boost. And that second boost is coming from a combination of really good export sales. We're selling more corn to Mexico, and we're selling a little bit more to China than we expected. And we're starting to get a rally in soybeans. And the reason we're having a rally in soybeans is because of some weather problems in South America, which I'll talk about more in a minute. So this is new crop corn. So this is the December corn contract. So if you're looking to try and pre-price some corn for delivery at harvest, this is the futures market we're using. And notice where we closed today. That's the high of the contract. We have, so far for the December delivery, this is the highest price for corn you could have ever contracted. Now the question I'm starting to get from a lot of farmers is, how high will that go? Because they always want to hit the peak, right? You always want to hit the highest. It's got to be 20 cents more, right? I'll be blunt, I don't know. I'm not sure how high this will go before it starts to tip over and say, you know, this is enough. We got to take a break. But I think we'll find out in the next week or so. I don't know that we have enough lift in the marketplace to keep that thing going up as fast as it has been for the last month. We'll wait to see. Talk about soybeans. Guys, I'm almost to wheat, so bear with me. On soybeans, we had the largest soybean crop in history. We just beat the old record. So in the same year, we had the largest soybean crop and the second largest corn crop in the same year. We're not short of grain. The reason we had such a big soybean crop was, again, the eastern corn belt. Illinois, Indiana, Ohio, Kentucky, Missouri, eastern Kansas. They all had a fantastic year. Western corn belt, where we live, yeah, we had some problems. So why are soybean prices so sky high right now? Demand. Brazil is part of it. Okay, one of our big competitors, in the international market, one of the big competitors is having problems, and I'll talk about that in more detail in a second. But it's because there is pretty strong demand globally for soybeans, as well as domestically. We can't forget our domestic market either. So how do we use up soybeans? Blue line is crushing. We crush it into oil and meal. Okay, the red line is exports. Now, usually I jump right into exports, but I do want to talk just a moment about the blue line and crushing, because there's some changes going on in the world of oil seeds. Now, normally when you're talking about crushing soybeans or crushing canola, right? When you're crushing soybeans especially, what the profit margins are usually made in selling the meal for livestock feed. If you can break even or make a little bit of money on the oil, you're fantastic. That's a good year. Well, in the last 12 months, soybean oil prices have doubled. Part of that is because there's a shorter supply of palm oil internationally, so all oil seeds are higher priced. But part of it is because the interest in and the expansion of renewable diesel. And North Dakota is smack dab in the middle of this. So understand the difference between biodiesel and renewable diesel. It's a really important distinction. Biodiesel, you take soybean oil or canola oil, you refine it to a really high level, and you blend it with diesel fuel, just like ethanol. Okay? And then you burn it. And we've had that around for quite a while. That's not a new thing. What is new, and we've had the technology for years, we just haven't used it because it's too expensive. Renewable diesel is where you're taking soybean oil or canola oil that's been refined, and you're running it through a refinery, and you're making diesel fuel. So you're making diesel fuel out of vegetable oil instead of crude oil. Now, why is that so important? It's because of carbon. The carbon footprint for renewable diesel is a fraction of the carbon footprint for regular diesel. And why is that important? Because California has some new laws in place where they're limiting the amount of carbon that is being released. It's called the Low Carbon Fuel Standard. It's a law that is state-based. California has it. Washington State, Oregon have all passed a very similar thing, similar laws. New York State is looking at something similar. Why is that important to North Dakota? Because everybody, you've heard about the small refining plant that went up in Dickinson a couple years ago. The idea was you're going to take crude oil from the Bakken, refine it into diesel fuel, and sell it back into the Bakken. Great idea, but the plant was too small, too expensive, and the company that put it up went bankrupt. Marathon Oil, which is a big oil company based out of California, bought that plant. They converted it over and retrofitted it, so now it's making renewable diesel. It's one of 3 plants in the U.S. that's making renewable diesel right now. okay? And every gallon coming out of that plant is going to California. You've probably heard about the big soybean crushing plant and the ADM plant that's coming up in Spiritwood, just outside of Jamestown. That's 75% owned by ADM, 25% owned by Marathon Oil. There's a supply agreement between ADM and Marathon Oil. All of the oil, the soybean oil coming out of the ADM plant, is going to go to Dickinson to be refined into renewable diesel and go into California. Now, how quickly will this grow, we don't know. But it is something that the oilseed market, soybean oil, canola oil, and to a lesser degree sunflower oil, is getting really, really interested in. There's a lot of excitement around that. There's some really big companies spending a lot of money to get prepared for this. Whether it comes or not, I don't know, but it is impacting behavior. So the blue line that we see right there, actually there was a little uptick from what USDA increased a little bit. The oil crushing plants right now are working full bore. They're running 100% capacity. So the demand for soybeans domestically is very, very strong right now. Profit margins for crushing soybeans is very high. Okay. How about exports? Last year was a record export season for U.S. soybeans. This year we're off a little bit, mainly because, again, China's not buying quite as much soybean. I'm going to skip over that. So what's happening in South America? Why is this such a big deal? Because both Brazil and Argentina, not only do they produce soybeans, they also produce corn and compete with us in the global markets for corn. Argentina is also a pretty large wheat exporter. Now, they export what we would call hard-red winter wheat. It's not a spring wheat, but they do compete against us. So the weather in South America has an impact on a lot of different commodities. The one we're focused on right now is soybeans, so the darker the green, the more soybeans are produced. Okay? In the northern part, we talk about Mato Grosso. You probably have heard about that. It's a big, big area, big state. They'll grow a lot of soybeans. They grow quite a bit of corn. Mato Grosso in the north had a really good year. Their yields were actually very good. The problem is in the south. So in the southern part of Brazil, down here in that southern tip, their combines are just finally now finishing in the north and moving south. They're finding out the yields in the south, because it was so hot and dry during flowering and pod set, they're having actually a tougher year than we expected. Okay? So we don't know what the total is yet, but it's not good. Okay, so this was taken a little while ago. This is a vegetative NDVI. You guys have heard of NDVI? That's where you take a satellite and how green is the crop, and it gives you an idea of kind of what the crop health is and what yield potential might be. Now this map shows NDVI relative to history. So you're saying for this week, how does this week compare to what you would normally see at this time of year? So if it's green, it's better than normal. If it's brown, it's worse than normal. Up here is Mato Grosso, and most of that is in green. Down here, look at all the brown down there. They're having some problems, and again, when we get into Argentina, their big growing region is kind of right here, right in this area here. And that's impacting both corn and beans. Okay, both corn and beans. There's where Argentina produces most of their soybeans. So let me give you some numbers just to put this in perspective. Then we'll get to wheat. I'm almost to wheat, guys. Just be patient with me. The U.S. had the record soybean crop. Now, I've converted to million metric ton just because that's what the traders, international traders, talk about. So our soybean crop was 121 million metric ton, 121. That was our record. Last year, Brazil produced 138. That was a record for them. Now, when they were planting their crop, when we were harvesting ours and they were planting their soybeans, most of the private analysts, those private forecasters trying to say how big is this crop, were looking at 140 to 145. So everybody's thinking, man, this is going to be a tidal wave of soybeans coming from Brazil. USDA just came out with their new forecast at 134. A lot of the private analysts right now are projecting 125 to 130. So that's a 20 million metric ton cut just in Brazil. We haven't gotten to Argentina yet. So the moral of the story is, earlier this year, we thought there was going to be this tidal wave of soybeans in Brazil and Argentina, and now it's not. They're still going to export beans, they're still going to have an okay crop, but it's not going to be nearly as big as we thought. So we have countries now that were waiting for these soybeans to be harvested and hit the marketplace that are now coming back to the U.S. and buying more U.S. soybeans, both for old crop, the stuff that's in the bin, as well as contracting for new crop, the crop we haven't planted yet. So what's that doing to soybean prices? Well, here's that carryover stocks. Okay, so let's jump to carryover stocks. How does the red bar compare to our history? Now, when we had the really big bars, remember that was during the trade war, soybean prices were horrible, they didn't move. Before that, when we had some really tight supplies, soybean prices were exceptionally high and we had just huge volatility. Where are we today? Kind of like corn, about in the middle, right? So same question is, does soybeans have to buy a whole bunch of acres in 2022? Do they have to work really hard to increase our acreage? Maybe not. Can they afford to lose any? No, they can't. And I'm going to make the argument in a minute that they might have to increase their acreage. Soybeans might have to buy more acres just because of what's going on now in South America. So this is the close of markets today. These are March soybeans, so that'd be old crop soybeans. I had a guy, so I did a program just before Christmas in the Fargo Dome, and we talked about, because in the Fargo Dome we were back here. This is kind of where prices were back in December. I said, you know, guys, we're getting kind of back up to the record highs we had during this June time period. You better be selling some of your soybeans. I was at a meeting here a couple of days ago. One of the guys who was at the meeting, guess what he came up to afterward and said? I heard you the other day, so I sold my soybeans, and now they're $2 a bushel higher. Yeah, dang it. I wasn't planning on a big crop failure in Brazil. But look what's happened in the last couple of weeks. That's old crop soybeans, soybeans in the bin. This is new crop soybeans. Same kind of deal. So if you have $14.40 soybeans on the futures, how many acres is that going to buy? I think the soybean market is working pretty hard to get some more soybean acres. Thus, the reason corn is going up is because they can't get left behind. Okay? So that sets the stage now for wheat. What's going on in old crop wheat in Durham, spring wheat in Durham, and what's going on with new crop? Because spring wheat and Durham have to compete against some of these crops. Not so much Durham, but spring wheat does. Now this is all wheat. This is all classes wheat blended together. I'm going to talk about spring wheat separately and Durham separately in just a minute. We did not have a good wheat crop. Winter wheat was okay. Our winter wheat crop was okay, but spring wheat, Durham, and white wheat out in the PNW, Pacific Northwest, were horrible. Everybody knows that. Old story. How to ease up wheat? Well, the blue line is domestic milling. How quickly does that change? How hard is it to forecast the blue line? I can even do that. Okay. How about the red line, which is exports? That's a lot harder. And notice that on the far right side, the little dots is going down. Now, if you don't produce as much wheat, you can't export as much wheat. So some of that is just we don't have it available. But there is a trend going on that's a little bothersome to me. It's worrisome long term for the wheat market, in my opinion. Look at what happened several years ago versus what's happening now. Before, we had all this big bouncing around, right? From year to year, we'd sell our brains out of wheat, we'd have big export demand, or it would cut back again. And now all of a sudden it's stabilized, hasn't it? Why is our wheat exports stabilizing? Because we have to export about 50% of our wheat. We grow so much of it in the U.S., we have to find a home internationally. About half of it leaves. U.S. dollar? U.S. dollar has an impact. It has an impact. But the last several years, the dollar hasn't changed much, right? Russia, thank you. Both Russia and Ukraine, to be honest with you. Okay, so let's go back a few years, early 2000s. If we had a really big wheat crop, wheat prices dropped, okay, we could be competitive in the international market and we could get rid of all of our inventories. Until Russia and Ukraine got big enough and efficient enough, now they've taken over a lot of those markets that are very price sensitive. So what happens is if we have a really big year and the bins are full, we try and lower our wheat price to try and sell more. All that happens is they lower their price some more and we don't get the sale. So who are we left with right now in today's marketplace? Who do we sell U.S. wheat to? Are really steady, reliable customers. There are countries that buy U.S. wheat because they like U.S. wheat and because they like the consistency. It's a good quality, very consistent product. You order it, you get what you order. Other parts of the world, they can't add that consistency. You order it, and you never really should know what's going to show up. Okay, so there are countries that are very quality sensitive. They want to have good, consistent quality. They don't want to mess around with bad wheat. And then there's other customers that are very price sensitive. They're not so much worried about quality as long as it's cheap. And we've lost those markets. We can't cut our prices low enough to get back into those markets because other countries are beating us to the punch. Okay? So who do we sell wheat to? Now I know it's kind of complicated. I don't want to spend a lot of time on it. All of the numbers on this chart, with the exception of the column on the far right-hand side, all of the other numbers are 12-month totals. So what countries do we sell wheat to? The column on the far right-hand side is from June 1 through the end of January. Okay, so it's about 7 months. But who do we normally sell it to? Well, the red, Mexico, is typically our #1 wheat customer. Did everybody know that? Mexico is our #1 wheat buyer. Usually, the Philippines is #2, and then Japan is #3. But what happened last year? Who suddenly popped on the chart last year? China. Now, there's a lot of reasons why that happened, and I don't want to bore you with all the details, but look at the number that they have so far this year. Pretty small. So they didn't buy much from us. They popped up really high last year, and now they're kind of back off in the shadows again. And to be very honest, my opinion, I don't think they're going to buy a lot of U.S. wheat this year. So now we're relying on these really solid, steady customers like Mexico, Philippines, Japan, South Korea, Nigeria to buy our wheat. And they've been buying wheat kind of on a regular pace. They've slowed up a little bit in the last month or so. They were on a really nice kind of regular schedule. They come in and buy some U.S. wheat about every week or every other week. But since January, the month of January, they kind of slowed things down a bit. Hopefully, they'll kick back in shortly. So what about ending stocks? Let's look at our lines again. Now, this is all wheat. I'm going to talk about spring wheat separate in a minute. So let's look at the blue bars versus the red one. So if we look just at wheat in the U.S., does the wheat market have to buy a bunch of more acres? Can it afford to lose some acres, to have a little slippage? Maybe. Kind of depends, right? So understand, we're coming off of some really big storage years. If you go back a couple of years, we had 50% carryover stocks. We had wheat coming out of our ears. We're now down to about 33% inventory. Now, sidebar comment, I just want to make sure that everybody understands that I got a lot of phone calls this fall when we started getting close to $10 cash spring wheat. And I said, what are you waiting for? Why aren't you selling more wheat? And the answer was, I'm waiting for $20. Because you remember what happened in 2008, right? The spring of 08. Okay, farmers are going, yes, and some of the others are saying, why would you not sell at $10? And I told everybody, this ain't going to happen again. If you're waiting for $20, hopefully your grandkids can sell your wheat. Because it ain't happening this year. understand there were some really strange things that happened that caused $20 spring wheat. One of them was we had very tight stocks. So this is our carryover in 2007 and 8. So the spike, that $20 wheat, hit in February of 08. So here's where we were in February of 08, and here's where we are in February of 2021. Now, if you look at spring wheat only, same graph, just spring wheat only, here's where we were in February of 2008, and here's where we are February of 2022, excuse me, today. Are we going to hit $20 spring wheat? No. I'm sorry, guys. We may get there, like I said. If you're waiting, hopefully your grandkids can sell your wheat. So my question on spring wheat, when we look at the red bar versus our historical kind of how much do we normally have in inventory, does the spring wheat market have to bid really aggressively to buy more wheat acres? Can it afford to lose a lot of wheat acres? That's the debate we're having right now. That's the debate we're having. So how do we use up spring wheat? Again, the blue line is domestic milling. It stays relatively stable. Exports bounce around quite a bit. Who do we sell spring wheat to? Number one customer is the Philippines. Number two customer is Japan. Usually number three is Taiwan, but China came in last year. Again, how much have they bought so far this year? Goose egg. I don't think China's going to buy spring wheat from the United States. They're buying a little bit from Canada, but they're not going to buy from the US. It ain't going to happen. Now, the interesting thing, this is a sidebar, I just want to make sure everybody understands. Number 4 on the list now, based off of last year's numbers, is Mexico. Mexico's buying spring wheat. But in talking to the Mexican wheat millers, and I've done some meetings for those guys, they like low-protein spring wheat. I hope Neil Fisher isn't around because he'd hang me for this. The Mexicans want low-protein spring wheat. If you can have a 12.5 to a 13 Pro spring wheat, they will love that stuff. Because if it gets above 13 Pro, it's too hot for the kinds of breads they make. Now, the guys in the East like that story because they grow lower protein, especially western Minnesota and eastern North Dakota. We got a lot of bushels, but the protein is low. So they kind of like that story, saying, well, if finally we have a market that we can get rid of some of our low-protein wheat with. And oh, by the way, now that CP Rail has bought out KC Southern, I think it'll be a lot easier to get wheat from Canada and the northern U.S. down into the Mexican market. But I want to be very cautious. This is low-pro only. If it gets to 13.5, they won't buy it, which you guys can ignore because I know yours is 15 plus. Normally, all right? But I do want you to point that out. Again, let me come back to, we've had good export sales, but they've been very quiet in January. But when we hit Christmas, the wheat market, our export sales suddenly kind of went dormant. And they really haven't kicked back in yet. What I'm hoping as we get into spring's work, some of that export sales will start to rebuild. Yes, the Canadians also had a problem. So the gold bars are Canadian production. The green bars are U.S. production. This is spring wheat only. This is what's happening in the futures market. So this is for old crop wheat. If you're to sell some wheat today, they're going to use the March futures contract, which is this one, to price it. So what do you see for price trends? Now, I did get this right. I was trying to get everybody, you may have heard me on the TV one time. I was doing a program, just before Christmas, I did a program in Bismarck, and there was a TV crew in the background. I knew they were there, I just forgot about them, and I made some pretty strong statements about why farmers should be selling their wheat, and I heard about it. But this one I guessed right, because here's where we were back in Christmas, and here's where we are today, so at least I guessed right on one of them. Now, will this recover? That's the question I'm getting. Are we going to get better wheat prices as we get into spring's work? Maybe. Maybe. I'm not as confident. This is new crop. Now, this is my opinion, so please it's my opinion, take it for what it's worth. My opinion isn't any better or worse than yours. I'm just reading the tea leaves like you are. In my opinion, I think we will see a rally in new crop spring wheat. And here's why. I think the spring wheat, I don't think the spring wheat market right now today has figured out or fully recognizes how the profitability of spring wheat is comparing to the profitability of other crops. So you guys are doing your crop budgets, you're trying to put together financing for 2022, you're working with your banker. What kind of budgets? How does spring wheat budget against some of the other crops you grow? Now, if you look at spring wheat only, and you say the bottom line, you know, that's not bad. You know, to project that kind of profit, even with high fertilizer prices and high chemical prices, I get it. But you do the math on it, the bottom line for spring wheat ain't bad compared to history. But you compare that to all of the other crops you can grow, and it doesn't stack up very well. It's not as competitive as it will need to be. Okay, so I do think new crop spring wheat will eventually figure that out, not only here in the States, but also in Canada. Because they're doing the same basic math you are. So I do think we're going to get a rally, in my opinion, a rally in new crop wheat to be able to hold the acres. We can't afford to have a lot of slippage. Because you think about potential slippage here in the States and potential slippage in Canada, and the wheat market could be in, the spring wheat market specifically could be in trouble. Okay? But I don't think that will happen until probably maybe late February, early March. But I think by early to mid-March, I think you're going to see spring wheat prices for new crop. I don't know if it'll translate into old crop, but I do think for new crop, you'd be looking at better prices. So I'd be a little patient in trying to contract or forward price spring wheat for 2022. So before I finish up that comment and talk a little bit about what's going on north of the border, I want to talk a little bit about this Russia-Ukraine thing, because I know there's a lot of wheat farmers that are getting kind of excited about the possibility of higher wheat prices. Okay, but there's also some kickers. There's some downside to this as well. So Russia is the largest wheat exporter in the world. They export more wheat than anybody else. Ukraine is number 3. This year, U.S. is projected to be number 4. We used to be number 1. So when Russia and Ukraine, we're talking about really big wheat exporters. But they export what we would classify as a hard red winter wheat. Their classification system is different, but if you take their wheat and run it through our system, we'd say that's a hard red winter. It's about 11.5 to 12 protein. It's a hard wheat. It's got a amber color to it. Okay? Now this is a map of the Black Sea. So I want to point out a couple things, especially for the folks in the back. The border between Russia and Ukraine is right here. It's right here. Okay? So this is Russia, this is Ukraine, this is the peninsula of Crimea. Remember Crimea? We talked about this still disputed on actually whose ground it is. Is it Russia or Ukraine? So the red dots, these red dots, are the major grain export facilities for Ukrainian wheat and corn. Ukraine is the 4th largest corn exporter. I mentioned that earlier. So red stars, that's where Ukraine exports their grain. The blue stars is where Russia exports their grain. They have 3 major ports. The black star right here in Crimea, that's the Russian Black Fleet, Black Sea Fleet. There's 2 big Russian naval bases, one in Crimea and one up in the Arctic Circle for the Russian fleet. This is why Russia wanted Crimea back, is to make sure that their naval base, they got a big naval base there, is protected. Okay, so what happens if this political tension turns into military action? I'm going to zoom out a little bit. This is a map, so here's Crimea right here. This is Russia over here. This is Ukraine up here. And the Mediterranean Ocean, and Mediterranean Sea right here is right down in here. So how do you get vessels, whether it be ocean-going vessels for grain or crude oil or natural gas? Because Russia is the second largest exporter of crude oil right behind Saudi Arabia. They are the largest exporter of natural gas. Some of that goes through pipelines, some of it they liquefy, they compress it like propane, put it into a ship, a vessel, and export it that way. So how do you get vessels out of the Black Sea and into the Mediterranean? Any ideas? There's a little canal. This is Istanbul, Turkey, right here. There's a little canal that allows vessels to go back and forth between the Black Sea and the Mediterranean. So my question is, if there gets to be military actions, how hard would it be for the Russians to blockade that canal? Or on the flip side, how hard would it be for the US and NATO to be able to blockade that canal and cut off crude oil exports out of Russia and or wheat exports? Okay? Now everybody's thinking, okay, well, if the number 1 and the number 3 wheat exporter are suddenly left out of the market, wheat prices are going to increase, right? Should be a boon for the spring wheat guys. Not necessarily. Because remember what I talked about corn. If corn prices are high, what does that mean for our US winter wheat prices? They have to be high enough that it isn't used for feed. And spring wheat prices are above winter wheat prices. So this is a graph. This is from yesterday. These are export bids for wheat in the global market. So just like the elevator posts export bids to buy several months into the future, this is for March, April, May, all the way through November delivery. So this is forward bids. The green line on top is the bid for U.S. hard red winter wheat loaded in the U.S. Gulf and sold to Japan, or basically North Asia, Japan, South Korea, maybe into China. So the green line is the price delivered to, let's say, Japan, out of the U.S. Gulf. So this would be 11 protein hard red winter wheat delivered to Japan. The blue is Australian white wheat at about 12 pro. So they have a hard white wheat that would be very similar to our hard red winter. You take the outside hull off and you can't tell the difference. The black line is Argentine wheat. Remember I said Argentina exports a lot of wheat? And then the red line right here and the gold line, the red line is Russia and the gold line is Ukraine. Now these are the prices as of yesterday, and includes all the ocean freight and that kind of stuff. So if I'm in Japan and I'm looking to buy hard red winter wheat, who would I buy hard red winter wheat for delivery, let's say in May? So here's May right here. If I'm a buyer of wheat, who should I go to? I go 3 places: Ukraine, Russia, or Argentina. And they're much cheaper than US wheat, especially hard red winter. So what happens if Russia and Ukraine suddenly disappear? They can't export wheat anymore. What's going to happen to the global price of wheat? It'll come up. The question I have is, will like the black line, will that go up high enough where all of a sudden US hard red winter wheat is competitive? Just because we have a shooting war between Russia and Ukraine does not necessarily mean that we in the US are going to be able to sell more wheat, because our wheat prices are so high relative to everybody else. Does that make sense? So I know there's a lot of excitement, and this may be a big deal for US wheat, where we can suddenly start selling a bunch of winter wheat and a bunch of spring wheat, and prices will go nuts. But in my opinion, it's going to take more than just, people getting mad at each other. This is going to have to be pretty serious stuff before the wheat price gets high enough that we can be competitive. Okay, let's talk about durum. I still have time, right? Okay. So the blue bars are durum. This is ending stocks. Now this is USDA numbers, and you know what? The thing with USDA numbers in durum is you don't want to press them too hard. I think it gives a general indication of what's going on in the marketplace, but I wouldn't push the numbers too hard because there's some funny things going on I'm not really sure match up with when I talk to people in the durum industry. It doesn't quite match up with the numbers that USDA is putting out. So this is one area where USDA and I disagree. But let's look at their numbers, okay? So where is the inventories of durum relative to history? The red bar versus the blue. About average. I would agree, about average. Okay, let's look at production last year. So the gold bars are the Canadian durum, the green bars are US durum. And yeah, we had a rough year in US durum. The Canadians had a rough year in Canadian durum. The reason we're sitting, we don't see higher prices is because the bins were full before the drought hit. You know, again, Neil Fisher, what he says, you grow durum every year, you sell it every third. Well, our bins were pretty full by the time we entered this marketing year, and so now we're cleaning out our bins. And our inventories are getting tight. When I talk to farmers and I ask them how much do you have left, they're saying, well, I've got some. I'm always holding back a little just in case something really exciting happens, but I got rid of a lot of it, which is great. Thank you. You did a good job. Okay? Now, this is where I disagree with USDA. So the blue line on top is the amount that we use for domestic milling. So that would be the semolina mills. The red bar is exports, and then we have the gold bar, which is seed. Forget about the feed number, because that's irrelevant. Now, to have our exports drop off makes a lot of sense, because we don't have a lot to export. We never do export a lot of durum. And if we do export durum, it's usually the low-end number 2s, number 3s, number 4s. It's not the number 1 milling. The place I do disagree with USDA is the blue line. They're forecasting a pretty steep drop-off in total durum consumption, whether it's US durum or whether it's been imported from Canada. I don't think we're going to see that big a drop-off in domestic milling. My opinion. Which means if I'm correct, that means that ending stocks number is going to be a little smaller. We're going to use more than USDA is forecasting. So let's talk about the Canadians. How many durum acres are the Canadians going to grow? Rephrase the question. Are we going to, in the US first, are you guys going to increase your durum acres in 2022 relative to 21? Are you going to grow more durum acres this year? I would have a show of hands, but I don't want to put anybody on the spot. Okay, you know, are you going to have about the same as last year? A little more than last year? A little less than last year? Anybody willing to volunteer? Okay, so the gentleman over here is saying a little bit higher because durum versus spring wheat, durum makes more sense. You're saying about the same as last year. Depends upon what happens with the canola. Well, I'll tell you, canola prices are at record high. They're not going to come down. We're going to see very strong canola prices through 2023. And I'll show you why in a minute. We may see durum prices soften, but they're going to be very strong canola prices. Excuse me, I said durum. We're going to have very strong canola prices 2022 and into 2023. Now, rotation is going to get in the way. Rotation is going to get in the way of being able to expand a bunch more canola acres. What do you think the Canadians are going to do? What's going to happen to Canadian durum plantings? Going to increase, going to decrease, going to stay about the same? What are you guys thinking? What's your best guess? Down? Yeah, but aren't the durum prices and spring wheat prices in Canada very similar to what you're facing? Canola prices? You know, from what I've seen, the canola bids that coming out of Canada are very similar to the canola bids you're getting. I think you're going to switch to canola. I agree with that. But how many more canola acres can Canada grow? We don't know. We'll find out. We're going to find out. Canola acres in the U.S. will increase. Canola acres in Canada will increase. We're going to find out how many more acres they can plant. Well, what about pulse crop? Okay, I'm getting there, right? Hold that thought for a second. I'm getting there, okay? So this is ending stocks. Now this is out of Stats Canada. This is their January report. They should have their February report out sometime soon. I cheated a little bit. I usually like to create big long graphs so you can see some time series. So this is 2019, this is 2020, and here's 2021. So this is what StatCan is forecasting right now for ending stocks for the crop that just got harvested. So let's look at canola. 3.4 million metric ton, that's usually about the range. It's between 3.4 and 3.5. That's a really common number for ending stocks in a normal year. 3.4 million metric ton. Going into 2021, there was about 1.7 million metric tons. So this is about half the ending stocks they normally like to have in Canada. And how much did we end up with this year? 500,000. Now, Stats Canada did come out with a forecast for 2022. Their ending stocks forecast, given an increase in acres and normal yields, you only went from 500 back to 700. Not back to the 3.4 million. That's why I'm saying, because Canada is so much bigger in canola than we are. It's going to take at least 2 years of really good canola production to rebuild the inventories back to the levels where they feel comfortable. I would not be surprised to hear Canadian canola crushing plants close in August for maintenance because they're not going to be able to have enough supplies to be able to keep the plant running. We'll see. We'll see. Let's look at durum. 737, 752, 450. Let's look at spring wheat. 4.7 million, 4.9 million, 3 million. So my question is, in Canada, can the spring wheat market afford to have a little slippage? How about the canola market? Can they afford to have a little slippage? No, canola's bidding like crazy for acres. How about durum? Can the Canadian durum crop afford to have some slippage in acreage? I don't think so. So let's look at field peas. 233, 479, 50. Can the pulse market afford to have any slippage in acres? I don't think so. You look at lentil, 209, 406, 50. Where's the competition for acres going to come from? What crops can give up some acres to make room for these that really have to rebuild inventories? Rephrase, who's the tail end of the dog? Spring wheat. Because you look at oats, you look at flax, I mean, you figure almost any other crop and it's just, they're paper thin. Spring wheat's the only one that has some margin that they can give up. So let's look at historical plantings. This is my last slide, and I'll shut up and then you can ask me whatever you want to talk about. So I did put this together. Let's look at historical planted acres. This is actually in acres, not hectares. So the black line on top is canola. Now this does not include 2022, what the Canadians are forecasting for 2022. I just want to have this conversation. This is what they actually did. Okay, so they've got a little over about, I think it was 23 million acres, 23 million acres of canola. They have about, last year they planted about 16 million acres of spring wheat. That's this gold line right here, kind of a brownish color. So this is spring wheat, this is canola. The yellow line is barley. They grow a lot of barley primarily for feed. They don't do corn very well, but they can do barley pretty good. Okay, then we get the red line right here is durum. And then you have the field pea and lentil are the two different blue lines down here. The purple line is soybeans. Look at the soybeans. That Canada actually produced, they grew as many acres of soybeans in Canada as they did durum. Now most of that's kind of in Ontario, so it's in the east, not necessarily the prairie provinces. But Manitoba is growing more beans. So what are the Canadians going to plant? Because what the Canadians are going to plant will impact our prices up here quite a bit. So what acres are going to go up? Pretty much everything, right? I mean, all of them, what I call the smaller market crops, all of these other crops down here, not the big major ones, but all of the others are bidding like crazy for acres. Not only in Canada, but here in the States. Canola, good Lord, have you seen what the canola prices are for new crop? Even with high seed prices and high fertilizer prices, if you can get Liberty chemistry, you're going to plant canola. And the new crop contracts are fantastic, and I don't think we're going to see a big drop-off in prices after harvest. If we get a good year, it'll drop off some, but not to the levels we saw before. I agree with you. I think the durum acres will probably go up. Not dramatically higher, but I think they at least have to hold, if not grow a little bit for durum. Because there's some risk of drought. Now, this is the drought monitor map. This is Palmer Drought Index. Here's Saskatoon right here. Here's Winnipeg over here. There's a big spot that's missing right there because it's missing data. So they had some recharge of moisture, but not a lot, guys. You look at a U.S. drought monitor map, you look up, and I know you guys are very painfully aware with this red spot up here. It's dry as heck up here. I get it. So because of a risk premium, what's the yields going to be? I mean, right now, what everybody's doing is they're putting in trend line yield. They're saying we're going to have an average yield because we don't know what else to do. So if you put in an average yield and higher acres, we should be okay. What happens if we don't get average yields? Now what happens to price? And that's what a lot of these crops are really struggling with right now. And that's the reason I think the spring wheat futures, it has not woken up and realized the dynamics that are changing. It will. It'll figure it out. But it might take a little longer before they realize what's going on. Okay? That's my logic. Whether you agree with it or not, that's up to you. But that's what I got, guys. Are there any questions? Yep, over here. Okay. Go to work. Come on. So do Canadians have crop insurance coverage? Yes, they do. It's a combination of provincial as well as national crop insurance. It's not nearly as good as the U.S. No, it doesn't give the protection that we do up here. And oh, by the way, as a reminder, everybody, starting on February 1st, crop insurance is in price discovery. So all those charts I just showed you with the really high corn and soybean, those are going to translate in some very, very nice crop insurance coverage. Now that also means with the high coverage levels, your premiums are going to go up. So the higher the prices, it's going to give you a lot more coverage. You're going to have a lot better risk protection, but the premium for your that you got to pay for your insurance coverage is going to go up too, because those are linked. Yes, sir. Yep. Okay. Say that again. So the March is at 953 for spring wheat. And the July is at 943. So there's what's they call an inverted market, right? So what we call a normal market or a carry market is if today you look at today's futures and you keep going further in time, the price goes up. So normally you have a carry in the market. And what the carry in the market is signaling is they're going to try and give you an incentive to store some of your grain. Saying we need so much today, but we want you to spread those sales out, and we're going to give you an incentive. We're going to partially pay the bill for storage. Okay? Now, if it's an inverted market where today's price is higher than it is in the future, it's telling you the opposite. It's saying we're going to give you we're going to penalize you for storing grain because we want it today. So literally, the futures market is saying we'd rather have you deliver your wheat today and sell it today instead of wait until July and sell it in July. Well, what they're anticipating is that the 2022 harvest is going to be a good crop. And there's only a 10-cent. It was worse before, but it's 10 cents now. Yep, so the downslide was a lot worse, and now it's starting to flatten out a little bit. And the difference between new crop and old crop, between March and September, because September is the new crop month, is actually starting to narrow up too. For a while it was quite a difference, but now it's starting to narrow up some. Yep.
I was at an ag show in January in California, and the speaker there said, Frayne Olson from NDSU told the farmers to weld their bin doors on their wheat bins shut and wait for the buyers to come pounding. So is that true?
No. That's not what I said. He misquoted me on that. I did not say that. What I did say was that's normally what you guys do. That usually you're very stubborn when it comes to opening up the bins and getting rid of your inventory. That's not what I told him to do, but that's what you do. So I did not say that. It's like, God, I didn't know my comments traveled that far. Yes, sir.
Guess we'll wait again a little bit.
Okay, so let me paraphrase so everybody can hear it. And if I don't do this right, please correct me. But we've seen about a 60 or 70 cent increase in new crop futures. And part of that, the question was part of that due to some of the financial traders coming in and out of the marketplace? And is that part of the driving force behind what we're seeing? So let me go back so everybody can see. Let me go back to the futures market. So this is the September contract you're talking about. Oh, today's price, okay. $8.85 for 14 protein and Ray. Okay, so that would be off of March. So what basis level is it? Because that's the other part of this. I mean, I'm talking futures so that you can get an idea of kind of long-term what's been happening. But the other piece to this that you have to be watching that's really important and the market is signaling is what's happening to basis. Because the basis is your local market trying to tell you or signal to you, do you want grain delivered now or do you want it stored? Okay, so 14 protein is 68 cents today. Okay, for old crop. Okay, and that has gotten bigger. It was much less than that before. So let's talk, it was like minus 30 for quite a while. Okay, so let's talk about why was it a minus 30 a while back and why is it a minus 70 today? What is your local market saying with the basis? If the basis is really small, if it's a minus 30, what is your local market telling you to do? They're bidding really hard. They want grain to flow. Okay, at a minus 70, What is your local market saying? Not so much. If you want to sell it, we're happy to buy it, but we're going to have to work harder to find a home for it. Okay, remember what did I talk about earlier on the volume of export sales? We had really good export sales coming into Christmas, and since Christmas, our export sales have really dropped off. It's been very, very quiet in the spring wheat export market. Okay, so the domestic mills have not had to work really hard to get grain to flow to them. So in my opinion, once we start to see some more international buying of U.S. spring wheat, I think your basis levels will start to increase, and I think you're also going to see a bit of an increase in the futures market. But it's just, the problem is it's been so quiet. I mean, we've been selling a little dribbles of wheat here and there, but it's not been good volumes.
Okay, one more here.
Okay, yep.
I know the Canadian durum floods our market. Is there spring wheat flooding our market?
No, we don't. The U.S. millers don't buy a lot. They buy a little bit of Canadian spring wheat, but not large volumes. Where we see the big competition is in international sales. So remember all of the countries that I said, the Philippines and Japan and Taiwan? They're also buying from Canada. So that's where the competition comes.
Their durum still coming down flooding our markets.
So it depends on your definition of flood.
Well, the Carrington processing plants are getting it out of Canada. It comes down on a railroad. Our taxes help pay for that plant. And that's not right.
When it was first built a long time ago, it was. So, but please understand, when you look at where does Canada sell its durum, what countries does Canada export to? The U.S. is number 5 or 6. There's other countries they sell way more durum to. And some of those countries include Italy, they include Algeria, Morocco, some of the North African countries. So yeah, the United States is on the list, but we're kind of in the middle of the pack. We're not the first place that Canada wants to sell its durum to. Okay, so I just want to make sure that we're all on the same page here. There's no doubt there's Canadian durum coming across. That happens. And you can see the trains. And you can see the trucks. But also understand the volume shipped to the United States is relatively low compared to these other countries. Okay? Fair? All right. Other questions? I know I don't want to stand between lunch, because that's a dangerous spot to be. I'm going to get run over. So the question is there kind of a rule of thumb or a ratio between the prices of crude oil and the prices of ethanol? Okay, and the short answer is no. Okay, so the ethanol market, the ethanol price is actually the shock absorber between gasoline prices, which are really highly correlated to crude oil. So crude oil and gasoline is very highly correlated. Not 1-to-1, but it's pretty close. Okay, but the ethanol market is kind of the shock absorber between gasoline prices and corn prices. Because when you think about the cost of producing a gallon of ethanol, about 60%, anywhere from 60 to 2/3 of the cost is corn. So corn makes up a big portion of the total cost of manufacturing ethanol. Okay, so when corn prices are really high, and gas prices are really low, the ethanol market's trying to balance that out to keep the ethanol plants alive. So the better correlation when you're thinking about volumes used is actually how many miles do we drive? Because right now ethanol, no, seriously, because ethanol is not a substitute for gasoline. The reason we're buying ethanol and blending it is because it's an oxygenate. It prevents the engine from knocking. Okay, it's high octane. We're buying the octane. So what's actually happened is when we move to ethanol blends, the refineries decrease the octane level in the gasoline they were manufacturing. because they knew they could add the ethanol in to bring the octane level back up again. So ethanol is about 110 octane. Most of the stuff that's coming out of a refinery is about an 84 to 86 octane. When you pull up to the pumps, it's got to be a minimum of 86, sometimes 88. Depends upon what you're buying. So right now, the reason they're buying ethanol is because of octane. So ethanol prices can actually be above gasoline prices, and they'll still blend it. And it has nothing to do right now with the renewable fuel standard. They're doing it because it makes economic sense. They can make money doing it. Right. If it doesn't make economic sense, then all of a sudden the renewable fuel standard comes in and puts that floor to it, saying, okay, now you have to blend. Yep. So right now things are high enough, they're blending because it makes sense, but when prices fall, that's the floor. That puts the bottom to it. Yep. That's absolutely right. More questions, or should we break for lunch? Dinner, I meant.
Well, yeah.
I'll hang around and I'll answer questions as long as you want me to talk. It's up to you guys.
Yeah. Right. Yeah,
It goes better with a beer in hand.
We've
Yeah.
got a social plan next, so if you're going to stick around for the social,
I will.
some
I'll
of
be
those
I'll be
questions,
hanging
we
around
can
for
do
the
that.
social, so you
Okay.
can visit privately if you want.
Okay, great. Give him.
All right. Thank you very much,
Thank you.
guys.